Welcome to the daily brief, where I'll go over the highlights of the action in the market on Friday, September 9th, and then we'll see how things look for Monday, September 12th. We had a pretty positive day, and I go into a lot more depth and detail with my longer full-length video, but pretty much on the short term, we switched over to positive, and we're looking a lot better in the intermediate term. Some of the other scenarios and setups that we're seeing are showing some improvement, but they're not really full-blown positive yet. So let's go back and talk about what happened. Right at the open, we had a gap higher. We actually went above R1 immediately at 40.30. We then kept going up to R2 at 40.53, and we actually went above that. And as we were coming back down a time or two, R2 acted as support. Prices then drifted above, going higher above R2. Going into the close, we were just a little bit off of the high, but we still ended up being up 1.53%. This is a bit of a concern. Volume was below average. Since Labor Day, we've been seeing a little bit higher volume now. Well, that dropped off on Friday. So when you see an advance on lower volume, that's always a caution flag. The technicals are showing a lot of improvement, especially in the short term, and they're looking a lot better in the intermediate term. We're regaining some of the moving averages. Our oscillators are still pretty much negative across the board, but they're showing improvement. And a lot of our other intermediate term indicators, some of them have turned positive already, while others are showing some improvement. We still have inflation, interest rates, and growth concerns being the real fixation. That's producing a lot of the recession debate, and then any Fed speak that may come out. What can we say about what happened? The buying momentum, it actually continued on Friday, and it's becoming more broad-based. It's the mid caps that are kind of leading the way in this whole thing, which is kind of surprising. The S&P and the NASDAQ were able to regain their 50-period simple moving average, and that's a big deal for the S&P. The technicals are showing a lot of improvement. Our sector rotation and setups are improving, but we're still pretty much on hold with those. The 10 to the 2 and the 10 to the 5 yield curves are still inverted. Some of these inverse correlations that I've been talking about in the full-length videos, some of them are starting to shift, especially once short-term interest rates in the S&P. They're pretty much neutral right now, where they had been going in opposite directions. Sentiment is also shifted back to neutral, where we were slightly on the fear side. We had wholesale inventories. That was the main, pretty much the only report that came out on Friday. It was up 0.6% on a month-over-month basis, where they expected it to be up 0.8%. Another indication where an economic report is coming in lower than expected. Our trend is turning positive, but it's weakening because the green line is crossed slightly above the red line with the ADX. But as long as those two lines are close to each other, the ADX will continue to fall, even though we're still above 20. But we are below the moving average that I use to measure that as well. Our bias is positive since we had an up day. And I've switched our momentum over to being positive because we've seen 3 up days now. So what's our outlook? The technicals are improving, and especially in the short term are turning positive. We don't have any economic reports coming out on Monday. The whole list of geopolitical events, any one of these could come to the forefront, but the markets are really fixated on the inflation and interest rate scenario right now, and any Fed speak, especially from Chairperson Powell. Some other folks on the FOMC came out this past week and said some things that the market could have just freaked out about and didn't. So the only way that the market's really going to react to this, because it's like we've heard this before, is if Chairperson Powell comes out and says something different. So our scenarios, we're kind of going with the down scenario because intermediate and longer term, we're still looking more negative, and we still have a lot of headwinds with the market, but the technicals are improving. So that may resist really focusing on the downside right now, and things are turning more positive. I've also highlighted the up scenario because in the short term and even a little bit into the intermediate term, we are turning more positive, but we have to ask, can this continue? We do have significant overhead resistance of where we're at right now. And look at the full-length video to see the areas that I point out there. Our scenarios, they're showing some improvement, but they're still kind of on hold. as well. And the technicals, we're regaining a few of the moving averages. We do have some resistance overhead, but we've also been holding up with support. And we can't really go with the neutral idea right now because the ADX is still above 20, but it's declining and it's turned slightly positive. So our conclusion, the S&P might be turning positive now in the big picture. Short term, it pretty much has turned positive. In the intermediate term, it's showing a lot of improvement and turning more positive, but the long term still remains negative. So thank you. I hope you have a wonderful weekend. I will be posting the weekly video and the intermarket analysis video over the weekend, and I'll just talk to you in the next video.